please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Devam Modi, the director at Equirus Securities, joins in to discuss the fundamentals of the market. Devam, hi, thanks very much for joining in. First, in fact, let's start with pharmaceuticals because that seems to be the sector in focus today. Give us a sense in terms of whether you are currently advising your clients to buy at these levels and which stocks.
Yeah, so yeah, pharmaceuticals as a space remains something which is a slightly tricky thing to comment on right now. However, having said that, they are obviously good long-term businesses lying over there, and so we are typically not yet completely sure of what is happening at the sector level in terms of various movements which are happening. But there are certain stocks wherein opportunities are emerging, especially stocks where we are confident of the near-term momentum, or stocks where there is a larger portion of domestic component or things like that.
Okay, Devam, of all the pharma stocks, you guys like Cadila?
Yeah, so Cadila is something that we are definitely positive on. Now, what has happened is that there has been a recent correction in the stock because of sort of concerns related to the erosion that would happen because of competition in Lialda. Now, while there would be erosion over there, we are very confident of that this erosion will be more than made up by a lot of launches that they are looking at. Like there are major launches across 4-5 drugs and a lot of other transmodal products and all which are coming in. So all of these things should definitely ensure that the company posts a very healthy EPS growth in FY18 and 19.
The other stock which I find quite interesting in your list of recommendations is PC Jewelers. That stock is in fact at a fresh all-time high as well. What do you like about it, and what's your prospect for 2018 in terms of a target price as well?
So overall, basically on the whole jewelry space, we see a lot of positives with regards to the move from unorganized to organized, and various things related to hallmarking, as well as say transactions below 2 lakhs being stopped, and those kind of moves, as well as GST. All of these things will mean that the branded players and the players who are focused on growth and organized platforms will do better. And PCJ has been investing efforts. It is like just as a sort of anecdote, they are probably the largest Facebook following, even more than Tanishq per se, and on social media as well as advertising side, they have been doing a lot of efforts. So all of these we expect it to come through in the form of growth for them. Okay.
And finally, you like Godawari ISPAT?
Yes, so Godawari is something, yeah, so it is a typical commodity play. I mean, when the whole cycle is reversed favorably, now suddenly from a negative EBITDA, the entire increase in sales is coming more towards, because there has been a rising spread between pellet and iron ores, and pellet is one of their main products. So their EBITDA per ton on pellets has just shot up. And that whole rise in spread is coming through as operating leverage down to the profitability of the company. So that makes it very attractive. While it has run up a bit, but we still remain confident of a substantial run up from current levels.
It's not a bit, you know, from I think October end, it has doubled, more than doubled since November. That's what, less than a month or 6 weeks. Even at these levels, at 260 levels, you would still think that it can make gains?
Yes, so yeah, so basically we are looking at a strong profitability rebound. I mean, in this cases, the profitability rebounds, they generally move from being loss-making to a very good level of profitability, mainly because of the price in commodities that gets more favorable for them. So that is leading to a much stronger EBITDA and PAT growth. I mean, the EBITDA and PAT growth is going from negative to, let's say, plus 200 crores or something like that over the course of next 2 years in terms of PAT. So that is something which is going to boost the re-rating in the stock, and that our calculation suggests that that still leaves more than 80 to 100% upside on the table from a 2 to 3 year perspective.